So we will start with this question, example number 16, right? M and N are business partners. They started the business by contributing
But
capital.
I cannot see a
Oh, sorry,
presentation.
sorry. 1 minute. I have not shared the screen. 1 minute. I will share it. Okay. Is it visible now?
Yes.
Okay. Let me read it once again. M and N are business partners. They started the business by contributing capitals rupees 70 and 65,000 respectively. M provides his flat for business use and charges 22,000 yearly as rent. Pass necessary journal entries. Assume capitals are fluctuating. Okay. So we will pass the journal entry for this. So just draw the columns for journal. These are the columns for journal, that is date, particulars, LF, debit rupees and credit rupees. So just draw these columns, and after that just draw the golden box also. Once you are ready, tell me it is done.
Done.
Okay, so now we have to pass the entry for this rent, right? So the firm is paying rent. Okay, so tell me, if the firm is
Yes.
paying rent, so for the firm, that rent is income or expense?
Expense.
Expense. So can I say expense is increasing?
Yes.
Okay, so what the golden box is telling?
If expense increases, it will be written in the debit side.
So we will debit rent, right? Rent account debit. Okay, and how much is the rent? 22,000. Okay, and if we are paying rent, what will reduce? Money will reduce, that is asset will reduce.
Yes.
So we have to credit cash or bank.
Done.
Okay, now this rent is to be transferred to profit and loss account on the debit side, because since it is an expense, so it will be transferred to profit and loss account. Here again same, the logic is expense is increasing, so we will debit profit and loss account. And which account we had transferred? The rent account. So rent account we will credit. Okay, so there are two entries. One entry is for paying the rent, and another entry is for closing this rent account and transferring it to profit and loss account. Okay,
Done, sir.
yes, now let us move to the next concept, that is, 1 minute, it is not allowing me to save the file. Topic number 6. Okay, so just write this question in your book. Write a note on past adjustment. Write a note on past adjustment.
Done.
Okay. Now see, I will just read the answer. Past adjustments are concerned with the previous year entries which were left out or omitted or wrongly entered in the accounts. Now, what is the meaning of past adjustments? Means this is related with the previous year, right? In the previous year, either the accountant has left out or omitted some entry, or he has wrongly entered that entry, right? So, if after preparation of final accounts of firm, it is found that some errors or omission in account has occurred, then such error or omission are rectified in the next year by passing an adjustment entry, right? Means if they find that there was some mistake in the previous year, so they will rectify that mistake in this year by passing an adjustment entry. Okay, now how it is done? A statement is prepared to ascertain the net effect of such errors or omission on partner's capital or current account, right? Because see, whatever is the error or omission in the previous year, no, it will finally have effect on partner's capital or current account, right? So in this year, what we do, we correct that mistake by passing an entry or by giving the net effect to either partner's capital account or current account, right? Such errors and omission may be rectified in the capital account of the concerned partners by passing an adjusting entry. Means we have to pass an adjusting entry. Now here some caution is given. In case of past adjustment, students must check if the capitals are fixed or fluctuating. Means you should read the statement properly whether the capital is fixed or fluctuating, right? Now, if they are telling that the capital is fixed, then we have to pass the entry through current account. Means fixed capital means we cannot change the capital balance. So we have to pass the entry through current account, right? And if they are not mentioning anything, we have to assume that the capital is fluctuating. So we can pass the adjustment entry through partner's capital account. Now here there is one note. See, in the previous, the error can be either they had passed a wrong entry, right? So if they had passed a wrong entry, then we have to reverse that. Okay. And the second possibility is they have missed the correct entry, means they had not recorded the correct entry. So in that case, we have to provide. We have to provide means we have to pass the correct entry. Okay, these are the two possibilities. Either they must have passed a wrong entry, so to remove that wrong entry we have to reverse it. And the second error can be they had missed or they had omitted the correct entry. So in that case we will provide, that means we will pass the correct entry, right? On these two bases only we can pass the rectifying entry, right? So this is the concept. Now let us solve one problem based on this concept so that it will be easy for you. Okay, see, I am reading this question, example number 17. Gupta and Sareen are partners in a firm sharing profits in the ratio of 3 is to 2. Their fixed capital. Now see, here you have to concentrate that they are telling that the capital is fixed. So whatever adjustment entry we will be passing it through the current account. Okay. So the fixed capital are Gupta is 2 lakh and Sareen is 3 lakh. After the accounts for the year are prepared, it is discovered that interest on capital at the rate of 10% per annum as provided in the partnership agreement has not been credited to partners before distribution of profits. Record adjustment entry to rectify the error. Okay, so that means they had done one mistake, that interest on capital they had not given, right? So we have to rectify that mistake. Okay, so for rectifying that mistake we have to pass the rectifying entry, right? Now for rectifying entry, you have to prepare the column of journal entries only, right? So just prepare this column of journal, date particular, self, debit, credit.
Done.
Okay. Now in this case, we are supposed to prepare one working note that is called as adjustment table. Okay. So I will just show you how to prepare the adjustment table. Okay, this is the adjustment table which we are supposed to prepare. Okay, so how we will prepare the adjustment table? See, in adjustment table, the first column is particulars, then Gupta is one partner. For Gupta, the debit side and the credit side. Sarin is the second partner. So for Sarin, debit and credit. And for firm is nothing but profit and loss appropriation account, debit and credit. Okay, so please draw these columns. This is called adjustment table. This table will help us in preparing the adjustment entry or in passing the adjustment entry. So the columns are particulars. One partner is Gupta. For Gupta, the debit side and the credit side, and for Sarin, the debit side and the credit side, and for firm, the debit side and the credit side. And after this, please also prepare the golden box.
Done.
Okay. Now let us come to the question. Okay, they are telling that they had not paid the interest on capital, right? So instead of showing it separately, in the form we will show the total amount. 2 lakh plus 3 lakh, 5 lakh is the capital. On 5 lakh, 10% will be how much? On 5 lakh, 10% will be how much?
50,000.
50,000, right? So we will write here interest on capital provided. First we will write it in the form, right? Now you tell me, for the firm, interest on capital is income or expense?
Expense.
Okay, so what the golden box is telling?
If expense increases, it will be written in the debit side.
It will be written on the debit side. So we will write it here on the debit side, 50,000. Okay. Now, now here it is in the debit side. So for partners, it will be in the credit side, right? So for the first partner, it will be on 2 lakh, 10%. It will be 20,000. And here for the second one, it will be 30,000.
Done.
Clear? Any doubt? Okay. Now we will close this firm account, right? Have here total on both the side, 50,000 and 50,000. So what is the difference? The difference is 50,000, right? Now this difference, since it is in the credit side over here, here it will be debited, distributed on the debit side. This 50,000 will be distributed among the partners on the debit side in their profit sharing ratio. So what is the profit sharing ratio? 3 is to 2. Okay,
3 is
so
to
3
2.
is to 2 means how much it will come for this fellow? 30,000.
and 20,000.
and for this fellow it will be 20,000. Any doubt?
Will total in the firm side, right? The debit and credit.
No, see, if I had closed this firm account, heavier total on both the side. Okay,
Yes.
so the difference here is coming on the credit side, right?
Yes.
So since here it is in the credit side, in the partner's account it will come on the debit side, and in the partner's account it will be distributed in the ratio.
Okay.
Okay. Now finally what we have to check over here, here we don't have to do any balancing. You tell me now which side is more over here in Gupta's account.
Debit.
Ah, so we have to write here 10,000 debit, 10,000 debit,
Why 10,000?
because the difference is 10,000. No, say this is 20 and this is 30. That means debit
Yes.
side is more by 10,000.
Yes.
Okay, similarly check for Sarin now. For Sarin, which side is more?
Credit.
Credit side is more. By how much amount?
10,000.
10,000, right? So done. We had got the entry now. See what will be the entry? Gupta's current account will be debited. Why current account? Because as I told you that they are telling the capital is fixed. So we have to do the adjustment through current account, right? So the entry will be we got it in that table. Gupta's current account debit, it is to be debited by 10,000. Okay, and who is to be credited? Sarin's capital is to be credited by 10,000 and being adjustment made.
Sir, it should be current account, right?
Yeah, it should be current account. Sorry, I had by mistake written capital. I will correct it. 1 minute. Gupta's current account debit to Sarin's current account. Okay.
Yes, sir.
So any doubt the concept of adjustment entry is clear to you?
Yes, sir.
Okay. There will be more sums coming further related to this, right? Now the last concept of this chapter is called guarantee. Okay. So we will discuss that concept also. That is topic number 7. Okay. Now just write this question. Write a note on guarantee of profit.
Done.
Okay. Now just try to understand this concept. A partner may be admitted in the firm on a guarantee in respect of his minimum profit from the business. Such a guarantee may be given even to an existing partner. Guarantee of minimum profit to a partner means that a partner has been assured to receive a minimum amount of profit, that is called guaranteed amount, right? Means it happens in the partnership, like suppose if one person is important, right? And if you want him to join the firm, so he is not ready to join, then you are telling him some amount that okay, you please join us, say minimum 1 lakh profit we will give you. So that is called guarantee of profit. Okay. Now in this case, important guarantee of partner is given for minimum share in profit. Okay, means suppose we are telling that there are three partners, so we are telling to see that we will give you minimum 1 lakh rupees as the profit, right? Now if the actual share in profit is more than the minimum guaranteed amount, then the actual shares will be allowed to the partner, right? Means what, like while distributing, suppose if the actual profit is coming to 1,50,000, so we will give 1,50,000 to C, right? But the problem arises if there is a shortage, like as we told that we will give you 1 lakh, but after distribution if he is getting only 80,000, so there is a shortfall of 20,000, right? So that shortfall will be bared by the remaining two partners, that is A and B. That is called guarantee of profit. Understood the concept?
Yes, sir.
Okay, means what, a partner is given a minimum guarantee. Say for example, we are giving guarantee to C that we will give you minimum profit of 1 lakh, right? Now after distributing, suppose the actual profit for C is coming to 1 lakh 50, in that case no problem, we will give 1 lakh 50 to C, right? But if the profit is coming to 80,000, then the remaining shortage of 20,000 will be bared by the remaining partner A and B in their profit sharing ratio, in the remaining profit sharing ratio, right? So let us solve a problem based on this, so that you will understand it properly. Last we solved 18, right? Last question was 18th, no?
Sir, I did not write the number.
Yeah, it was 18th. Let us solve this 19th number question. One minute. Gupta and Serin was 17. Guarantee of profit. Ram, Raj and George. It should be 18th now. This is 19. First we have to solve 18. Okay, let us read the question first. Question number 18. Okay. See, Ram, Raj and George are partners sharing profits in the ratio of 5 is to 3 is to 2. According to the partnership agreement, George is to get a minimum amount of 10,000 as his share of profit every year. That means here the guaranteed amount is 10,000, right? The net profit for the year amounted to 40,000. Prepare profit and loss appropriation account. Okay. So what we will do, we will prepare profit and loss appropriation account, right? So just prepare this profit and loss appropriation account. Okay, once the columns are ready, tell me it is done.
Done.
Okay, now let us solve this. There is a net profit of 40,000, right? So it will come on the credit side. We will write here by net profit 40,000. Okay, and we will close this account. The net profit will be distributed among the partners. So 40,000, 40,000 on both the side, and here we will write two partners capital account into bracket profit.
Done, sir.
Okay. Now see, this will be distributed between Ram, Raj and George in the ratio of 5 is to 3 is to 2, right? So 5 plus 3, 8 and 2, 10. Okay. So how much Ram will get, tell me? 40,000 divided by, multiply by 5 divided by 10.
20,000.
20,000, right? Now see, instead normally we write it over here, but since this is a question of guarantee of profit, just write only 20,000. Don't write the second amount right now. Okay, just write Ram 20,000. Don't write this amount. I will tell you when this amount will come. Okay, just write in Ram
Okay.
20,000. Keep the bracket open only. Okay. Similarly, how much Raj will get?
What was the ratio?
5 is to 3 is to 2.
12,000.
Huh. So for Raj, just open the bracket and write 12,000. And who is the third partner? George. How much George will get?
8,000.
8,000. Right? So for George, write into bracket 8,000. Written, you had written this three amount, no? 20, 12 and 8, right?
Yes.
Okay, now see, how much guarantee we had given to George? 10,000. Am I right?
Yes.
So what is the shortage now? The shortage is of 2,000. Right now?
Yes.
So for George, we will write here plus 2,000. Okay, plus 2,000, right? And this shortage of 2,000 will be borne by Ram and Raj in the remaining profit sharing ratio. So just write this working note. See, there is a shortage. That means there is a deficiency of 2,000, or instead of writing the word deficiency, write the word shortage only. There is a shortage of 2,000. Okay, so this shortage of 2,000 will be shared by Ram and Raj in the ratio 5 is to 3, because that is their ratio, Ram's and Raj ratio, right? So just write this note, shortage of 2,000 will be shared by Ram and Raj in the ratio of 5 is to 3. So how much Ram has to contribute? 1,250.
Yes.
And how much Raj has to contribute?
750.
750, right? So this we have to subtract it. This fellow has to contribute 1250 for this 2,000, and this fellow has to contribute 750. Is it clear?
Yes, sir.
Okay, now write the final answer over here. 20,000 minus 1250 will be how much?
18,750.
Okay, 18,750. 12,000 minus 750 will be how much?
11,250.
11,250. And here 8,000 plus 2,000 will be how much?
10,000.
10,000. Okay. So total is 40. So you got the concept. In this, what we have to do, whatever is the profit, first you divide it in the normal ratio, right? And whatever is the shortage, that shortage is to be added over here, and it is to be bared by the remaining partners in the remaining profit sharing ratio. That is the concept of guarantee of profit. Any doubt?
Yes, sir. No.
Okay. One more sum we will solve based on this concept itself, that is of minimum guarantee only. That will be our example number 19. Okay. See, Mohit and Rohan share profit and losses in the ratio of 2 is to 1. They admit Rahul as partner with 1/4 share in the profits with a guarantee that his share of profit will be at least rupees 50,000. The net profit of the firm for the year ending March 31st was 1,60,000. Prepare profit and loss appropriation account. Okay. So we will prepare profit and loss appropriation account. Okay. So just prepare the profit and loss appropriation account as we had prepared earlier.
Done.
Okay. Now whatever is the net, what is the net profit?
1,60,000.
1,60,000. So right here on the credit side 1,60,000. Okay. And this will be
Done.
distributed between the partners. Okay, now see, in this case, since there is an admission of partner, we have to calculate new profit sharing ratio, right? So just write the formula of how to calculate new profit sharing ratio. Prepare this working note called calculation of new profit sharing ratio. Okay.
Do I have to write this?
Yes, you have to write this. Just I will explain and then you keep on. First write the heading calculation of new profit sharing ratio.
Done, sir.
Okay. Now see how we calculate the new profit sharing ratio, we assume that 1 rupee is the profit, right? Or we will say that we are having one roti. So out of this one roti, we are supposed to give to the new partner also. So how much we are giving to the new partner? 1/4, right? So just write this line 1 minus new partner's share. Written?
Done.
Okay. Now 1 minus, what is the new partner's share? It is given in the question, it is 1/4. Okay. So the new partner's share is 1/4. So 1 minus 1/4. So 1 minus 1/4 will be 3/4. How it will be 3/4? 4 ones are 4 and 4 minus 1, 3. So the remaining roti is now 3 upon 4.
Yes.
Okay. Now this remaining roti will be shared by the old partners in their old ratio. So Mohit, how much Mohit will get? What is the remaining roti? 3 upon 4. And their old share is 2 is to 1. So 3 upon 4 into 2 upon 3, which comes to 6 upon 12 for Mohit.
Yes.
Okay. Now similarly this Rohan will also share this 3/4 roti only, right? And what is the Rohan share? 1 upon 3. So it will be 3 upon 12.
3/12.
Okay. Now see, what will be the new ratio now? This is 6 upon 12 for Mohit and 3 upon 12 for Rohan, right?
Yes.
Okay. And now what is the new partner share? It is 1 upon 4.
Yes.
Now what we have to do, in this case, here it is 12, here it is 12. So here also it should come 12, right?
Yes, sir.
See, this fellow is having in the denominator t-shirt number 12. This fellow is also having t-shirt number 12. But the third fellow is having t-shirt number 4. So to make it 12, what we will do?
Yes. Multiply by 3.
So same number you have to multiply up also. Okay. So
Okay.
all these 12 are common. So now the ratio will be 6 is to 3 is to 3, which can be further reduced to 2 is to 1 is to 1.
Okay.
Understood how we calculated the new ratio?
Yes.
Okay. See, once again I am just repeating it is calculated as we have to do 1 minus new partner share. Means we will assume that we are having one roti. So out of that one roti, if 1/4 we will give, then the remaining roti will be 4 ones are 4 minus 1, 3 upon 4. So this 3/4 roti will be shared by the old partners in their old ratio. So 3/4 into the old ratio of Mohit is 2 upon 3. So it becomes 6 upon 12. Here you don't have to cut anything. Even though this 3 and 3 we can cut it, but don't cut it. Keep the denominators equal, right? Similarly, Rohan will also get the share from this 3/4 roti only, right? So from 3/4 he will get the share as 1 upon 3. So it becomes 3 upon 12. Now we will write the new ratio. This fellow is 6 upon 12. This fellow is 3 upon 2. And the new partner share is 1 upon 4. So we have to make the denominators equal. So in order to make the denominator equal, here we have to multiply by 3. So the same number we will multiply here also. So it becomes 6 is to 3 is to 3, which can be further reduced to 2 is to 1 is to 1. Got it?
Understood.
Okay, now you will divide this profit of 1,60,000 in the ratio of 2 is to 1 is to 1. Tell me how much the first fellow will get.
Can we use 6 is to 3 is to 3?
Yeah, you can use that also, no problem. Then it comes to 12, right? But I think this
Because in my school they don't further simplify.
acha, they don't further simplify. No problem. The answer will come same. You can use 6 is to 3 is to 3 also, no problem. So tell me what will be the first partner share. Oh, you have to divide 1,60,000. That is 9 and 12. 1,60,000 divided by 12. Multiply by 6, I suppose. So I think 6 twos are and 2 eights are 80,000 kuch aayega shayad.
20,000.
Okay. So just write Mohit into bracket 80,000. Keep the bracket open. Don't consider this amount right now. Okay. How much
Okay.
Rohan will get? Tell me. That will be 1,60,000 into
20,000.
3 upon 12. How much?
40,000.
Yes. So Rohan will get 40,000. So write 40,000. And how much the third one person will get? I think he will also get 40 only, right?
Yes.
Okay. So for this fellow also we will write 40 over here, right? 40. Now let us go to the question. How much guarantee we had given him? Tell me. How much guarantee is given?
One fourth share in profit.
No, no.
50,000.
50,000, right? So how much he is actually getting?
5. 1 minute.
This fellow, how much is actually getting? Hello?
50,000.
No, no. You forget about this amount right now. We had distributed this, no, 80, 40, 40, right?
Yes.
So he is actually getting 40, right?
Yes.
And we have given him the guarantee of how much?
50.
50. So what is the shortage here?
50. 10,000.
So 10,000. So this 10,000 shortage you have to plus here, and that 10,000 shortage will be borne by Ram and Raj. Okay, so I am writing here shortage of 10,000 will be borne by,
Mohit and Rohan.
what is the name of the partners? Mohit and Rohan. Yeah. So let me change the name Mohit and Rohan. And if you are not reducing, then I think the ratio is 6 is to 3. I had reduced it, no? So it is 2 is to
6 is
1
to
for.
3 is to 3.
No, but then we have to share only among this two, no? So we will not consider it for the third partner.
Okay.
Okay, only this two will share. So what will be the Mohit share? It will be 10,000 into 6 upon 9, right?
Yes.
10,000 into 6 upon 9. And who is the second partner?
Rohan.
Rohan. So the Rohan share will be 10,000 into 3 upon 9. Okay.
Yes.
So the calculation is coming to 6,667 and 3,333. So that will be subtracted over here for this two people.
Done.
Okay. So now what will be the final answer? Tell me.
73,333.
Okay. And what will be for the second one?
Six thousand 667.
36,667. What is the total for this coming? Is it 1 lakh 60?
Yes, 1,60,000.
Okay. So this is the concept of minimum guarantee. Okay. So mostly all the concepts are over. Now we can proceed towards solving the conceptual question which comes for 1 mark in this. I will just go through that. 1 minute. Computer is running little bit slow today. I don't know what is the reason. Okay. Yes. So this we had completed question number 19. You got it how it is to be solved, right?
Yes, sir.
Okay. Have you shared that videos with your friends circle?
Yes, sir. I did.
But I had not seen much views on that.
I sent it in the group. We have a group chat.
Okay, okay. Fine. 1 minute. Topic 5, topic 6, topic 7, question number 19. Okay, now we will start with this objective type question which comes for 1 mark, which is totally conceptual, right? Can you read the first question?
Aman, this one, right? Aman and Chaman.
Yes, yes.
Aman and Chaman are partners in a firm on 1st July 2021. Aman advanced a loan of 6 lakh to the firm. There is no partnership deed. On 31st March 2022, Aman was entitled to get the following amount as interest on loan. Option
Okay,
A is 36,000, B is 18,000, C is 9,000, and D is 27,000.
okay. So tell me, according to you, since there is no partnership deed, so what interest he will get? At what rate?
6%.
At what rate?
At 6%.
At 6 percentage. And when he has given the loan?
For July.
And what is the year ending?
31st March.
So from July to 31st March, how many months?
9 months.
9 months. So you can see this calculation, 6 lakh into 6 upon 100 into 9 upon 12. So what is the correct
Yes.
answer? Tell me.
Option D.
Option
D.
D.
27,000.
27,000 is the correct answer. Okay. Similarly, we will solve the second one. Just read it.
Rahul, Samarth, and Rahul, Samarth, and Ayan were partners sharing profits and losses in the ratio of 5:4. Ayan's fixed capital balance as on March 31st, 2024 was 2,70,000. Which of the following items would have affected this capital balance?
Okay.
Option A, profit or loss for the year. Option B, additional capital introduced. Option C, reduction in capital due to capital adjustments. Or option D, both B and C.
Okay. So the correct answer is both B and C. Why you know? Because see, they are telling that the capital is fixed, right? So whatever is the profit or loss, we don't transfer in capital account. We transfer it to current account. Okay. Acha, if he is being bringing any additional capital, then it is transferred to capital account. And if there is any reduction in the capital due to capital adjustment, that is also transferred in capital account, right? So his capital will change because of these two reasons, that is B and C. So what is the correct answer for this?
Both B and C.
D, that is both B and C. Okay, just read this.
Stella, Grace, and Carol were partners in the firm, sharing profits and losses in the ratio 3:2:1. Carol was guaranteed a profit of 15,000 after making all adjustments. Any deficiency is to be borne by Grace. The net profit for the year 31st March 2023 was 60,000.
Okay, was
Option A
60.
is
No,
credited.
these are the
No.
four options. Now we have to work out on this, right? So I think I had just
Yes.
prepared this. I will show you. 1 minute. Let this Excel get closed and we will solve it. multiple choice. I think from 7 we had done. Which one we are solving right now? We are solving third one, right?
Sir, I didn't mention the number.
1 minute, 1 minute. Huh. Okay. So we will just see. Fine. If you divide it 15,000, divide the 15,000 in the ratio of 3 is to 2 is to 1. What will be the distribution? Tell me. I mean, you do it only for the last partner. That is, the Carol is given the guarantee, no? So 15,000 into 1 upon 6 will be how much? No, sorry, not 15,000. The total is 60,000. Total profit is
So
60, right?
60,000 into 1 divided by 4.
60,000 into 1 upon 6 will be how much?
10,000.
10,000, right? And how much guarantee is given?
15,000.
So what is the shortage?
5,000.
Okay. So that 5,000 will be given because only one partner is giving the guarantee, right? So where you find the option of
Yes.
5,000 over here? What is the
Option
correct
B.
answer? B, right? So Grace will be debited by rupees 5,000.
Yes.
Any doubt?
No, sir.
Okay. Just we will solve one more. Just read this question number 4.
Sam, Tom, and Jerry were partners sharing profits and losses equally. Sam sold a land costing 5 lakh belonging to the firm without informing other partners and made a profit of 50,000 on sale of such land. Which decision should be taken by the firm to rectify the situation?
Read the options also. You got the situation, no? There was one land which was belonging to the firm, right? And one of the partners sold that land and he had made a profit of 50,000, right? So now there is a dispute and they want to rectify the situation. So how they will rectify? Tell me. Just read that A option. What is option A?
Option A, Sam needs to return only 5 lakh to the firm.
Okay.
Option B, Sam is required to return 50,000 to the firm. Option C, Sam is required to pay back 50,000 only, equally to Tom and Jerry. Option D, Sam needs to return 5 lakh 50,000 to the firm.
What will be the correct option according to you?
Option B,
Why B?
no, I'm saying option D
Yes. Which option?
because he did not inform other partners about selling the land,
So full
so he
money he
needs to
has to
return
return, right?
that money.
So full 5 lakh 50 he has to return. Okay. So what is the correct answer?
Yes. Option D.
Option D is the correct answer. Let me check out. Sorry. See, as per the Partnership Act 1932, if any partner utilizes fund or assets belonging to the firm and gains a profit, they are obliged to return both the initial amount and the profit to the firm. Got it?
Yes.
Here. In a partnership, it is a common principle that partners should not use firm's property or assets for their personal profit or gain without the explicit consent of other. Hence, Sam will return 5,50,000 to the firm. Okay.
Understood.
So, is this much enough today? Next class, we will continue from here.
Yes, sir.
Question number 5. All the concepts of this chapter are
Okay.
clear to you know now?
Yes, sir.
Okay, fine. Khuda Hafiz.
Assalamu alaikum.